Hi traders, and welcome to Pepperstone's technical analysis wrap on Friday the 1st of May. So we've finally seen the end of the horror April from a virus front, but it's been one of the biggest moves in the markets in recent history. We've seen some very big moves on all the key indices, which has given us some pretty good moves on the currency markets. We've seen some nice moves and technical levels broken in the last couple of days since the webinars on Wednesday night. So we'll jump straight into the markets and start to analyse some potential opportunities. So we'll start with the Aussie, as we often do. The daily here, we can see that we've got a pretty big rejection day. It's one of those ones where it's kind of in the middle of nowhere to an extent. Like we don't really, there is a little bit of support there, but probably clutching at straws really. I mean, the real support is up here at that sort of 67 area, 67.20, or at the very least at 200. So I would be expecting that we're going to see, an upward move before we see any real resistance. I'd be thinking that this support zone here, which was support and resistance there, that would have been the first point of real resistance, and the 200 should be pretty much there to actually cause a little bit more chaos for it. So that's sort of that 66 sort of 60 area, 66.50. That other one that I had earlier, that was sort of 67.20. That's probably a little bit more of a stretch, but this is definitely the first place that it's going to find trouble. A little bit of work to do yet to get there, but it's still making a series of higher highs and higher lows, as you can see. The 20 moving average is about to cross the 50, which we know is obviously bullish. The MACD is going great guns, still rising, as we can see here. The signal line is still well and truly inside the histogram. Histogram is still going higher. So look, no real reason to think that this is probably not going to continue on. It might pull back a little bit and potentially continue on. But my preferred trade on this one at the moment is still to take it long into that sort of 66.50 zone. That's the area that I'd be looking at, probably wanting to reverse this and maybe start looking for the short opportunities. But yeah, I'm not really interested in the short on this one yet. Now, if we want to look for a short, what it's going to need to do is actually come down, make a low, get up and make a lower high, so it doesn't get any higher than this on the rebound, and then potentially break this zone here, break the two moving averages, and break here below the 62.50. Now that might seem obvious, but this is a daily trend. This is a pretty serious trend. So I'm not into picking directions at the moment. As you all know, we're all about actually going for the scalp because the market is not really giving us anything in a longer term direction. So our preferred trade here is to go long. So we'll look for a re-entry if it comes back and retests that sort of 64.30 to 40 zone, which would be a really nice reload zone, and potentially take it into these highs here around that sort of 66.50. That's the preferred trade, but it's got a little bit of work to do before it does that. It has to, at the very least, make a new high in this initial move, or come back and test this zone here and change the trend on a really small time frame, like an hour. Then I'll be convinced it's probably going to go up to this level. All right, we'll move on to the US dollar CAD. US dollar CAD finds itself in a pretty interesting position now. It had a pretty reasonable sell-off over the last few days. You can see that yesterday was a pretty bullish sort of day for it. It found support on the 50 moving average, which is a secondary support zone, as we know. It broke through the 20 fairly easily, didn't even stop for a pause there. But it does find itself at a previous point of support. So we've got two touches here now at around that sort of 138.80 area. Okay, it's rebounded off that, and this is probably what I want to talk to you a little bit about. Now, it's easy to say, all right, this level is going to be the level it's going to come back to. What are we going to do when it gets there? Are we just going to go long when it touches the 50, or are we going to wait for more information? Now, this is where what you want to be doing is actually taking it to a smaller time frame. We identified the zone. We know that this area here, sort of that 138.70, is the area that we think is going to find support. We know that there's a 50 moving average there to bolster it on the daily. So this is when we start going down to the 4-hour and the 1-hour charts to see if we can identify something that is going to give us an entry point. Okay, so we can see here on the 1 hour, as aggressive as it looked on the daily, it's been a pretty nice flow all the way down. When it got here, you can see for about 8 or 9 hours, it just basically hovered here. The last few candles before it started to move are very bullish. As you can see, we've got a dragonfly doji there, we've got a normal standard doji there, long-legged, and then we've got this bullish looking candle. It found a little bit of trouble at the 20, which it has done all the way down. Obviously, we're going to expect that, but in saying that, we haven't seen this prior to any of the 20 touches, and that's actually quite significant because these two candles are very significant bullish candles off this zone. Okay, so We've got our zone, we know it's very strong on the daily. On an hour, we're getting confirmation that price action is changing, okay, and then off we go. If we want to drill down further for an actual perfect entry point, we'd need to go down to probably a 15-minute chart, and that's when we're going to see a series of higher highs and higher lows, okay? So we've got our initial touch there, we've got a higher high, higher low, higher high, higher low. Once that breaks there, we're off and running, if that 15-minute was what you were trading off. So there's always a time frame that you can make work, but you need to, the smaller time frames, all trends start from the smaller time frames. You must remember that, okay? So it's always good to drill down when you're looking for that perfect entry point, if you've got the time to do so. If you haven't got the time to do so and you're only trading an hour or two a day, when you see these signs on a 1 hour, you're basically going to say that is probably good enough. We know we've got support. We know we've got divergence on our side. We've got MACD starting to go above the zero on the 1 hour. We know the daily MACD is still rising, so everything is pretty good for a long. All right, we will move on to the. We'll look at the dollar Swiss here, because it plays the game for us every single week. This has been an absolute trading bonanza. Hopefully everybody has been trading this for the last 6 weeks as we have, because it's just proven to be a very, very easy trade. You can see here that it's obviously its support here, its resistance is up there. The 200 moving average has been playing the game for us. We mentioned this over the last few weeks, that it's getting up there, touching it and reversing off. The candle patterns are very, very clear. You can see here we've got the doji that touched the 200. It's our signal to go short. We know that our target is obviously here at the 96 sort of 20-30 area. Pretty easy target to go to. This is not a directional trade by any stretch of the imagination. Okay, we've got obviously the 20 and the 50 are ribboning. They're basically flatlined. The 200's also flatlining. They're both going in a horizontal direction, but they are holding price. The Swissy is, for all intents and purposes, a fairly boring pair at the best of times, but with that boring, long-term movement comes really, really good opportunities to scalp. And I think this is probably the important thing we need to take out of this, that although we're not getting big moves, we're getting very, very solid, smaller moves that are sort of going, and they're going 50 to 60 pips. It's not like we're only getting, 10 or 20 pips out of it. We're getting some pretty nice moves. So, until this trade tells us different, we want to be playing this game, selling at the support zones, buying at the support zone, selling at the resistance zones at around this 200. Okay, and just until we get a clear break above the 200 break would not be enough. It needs to actually break this level here, the 98.50, with a solid daily candle, before we'd be actually looking at taking this to the next highs, which is around that 99 to the parity, which is the 100. It needs to break the 200 and that for that to happen. Okay, but in the meantime, we'll just play this zone in here. Until we have got a different version. The only other way we would go short on this one, which is obviously a possibility, could do either way, it needs to have a solid daily break below this line here, which is the 96 sort of 30. I'd want to see, this is a daily chart, so we want to be seeing probably a break, below the 96 flat, really, 96 probably 90. A candle close down there, probably a daily, would convince me that maybe this little line is broken here, and we'll be going down to the next target, which is around that sort of 94.80 area. Okay, the US dollar yen provided some really, really good opportunities earlier in the week. We saw the break happen on Tuesday, which was really nice. That's been holding there for a long time. I know a lot of people got involved in that short, which is awesome. It didn't give us enough information to say that it was going to completely sell off from there, but in saying that, and you can see here that this zone is actually quite a serious support zone. You can see there that when we line that up, you can see right over in this far corner here, it was resistance, then it was support. So it's no surprise that it actually found a little bit of trouble getting through that 106.50, which is fine. That's just normal trading. What we have seen though is a move up to the 20 now, and what it's also doing is retesting the bottom of the previous support. Okay, so generally speaking, what we're looking for here is we want to see a short-term change of trend on a smaller time frame to say that this is going to continue down its merry way. Now, by that, we need to go down to probably a 1 hour chart. This is still a long way away from reversing. As you can see, we need to see a lower low, then a lower high form, and then obviously we're going to sell it into this zone here. But even going down a little bit further, not even the 15-minute is giving us a higher high, a lower high, lower low sequence. Okay, so there is just no indication at all that this is going to drop, and that's my point. A lot of people will say, you know, this is it's at that area now. It's at that roll reversal zone where support is now becoming resistance. Let's just sell it. Not even the 15-minute is giving us a sequence of lower highs and lower lows. So we don't want to be getting involved in this trade until we get the clear sign on a smaller time frame, and then our target is down here. Okay, if it breaks up and continues its strength and breaks up above these two moving averages and closes above there on a daily chart, then I think the short-term downward movement is probably not going to be sustainable, and it's probably going to head up into the 108.50 area again, which has been a very, very solid zone for it. All right, the last one we'll look at today is the US 500. I get a request for this every single day, so we'll keep monitoring it. We finally saw a little bit of weakness last night in the last trading period. It's morning in Australia here at the moment, so the US is now closed, so this is why we've got the new candle. It's look, it's an interesting candle. It's you know, it's not quite an engulfing candle, but it is showing a little bit of weakness. What is probably important is that it was hitting this level here, which is clearly a roll reversal zone. Okay, so we were probably expecting a little bit of weakness, but in saying that, we've been expecting weakness at every new peak that this one's made. So a little bit of work to do for this one yet. I'm not convinced at all that it's going long or short with any conviction. So all we want to be doing in this one here is basically, you know, trading it for the support, the short-term support and resistance. Don't go for anything extravagant on it until it gives us a very, very clear sign. One thing this is going to do, more than likely, if it's going to go down, it's going to go down a pretty long way. It's going to be a decent correction, but we're not going to preempt that because, you know, at the way the it is running, it's certainly not giving us any indication that it's about to short. That is a negative candle, yes, but I would like to be seeing probably, you know, at least a week of weakness, yeah, something similar to what we've got over here, before I'm convinced that this is going back down to those sort of 2200 levels, or at the very, very first stop, the 2450. We want to be seeing a fair bit more weakness. And by that I mean probably at least 3 days worth of weakness. And again, we go down to a smaller time frame, look for a series of lower highs and lower lows. Nothing clear here yet. What we'd want to be seeing in this instance is maybe a pullback up to potentially this level here, okay, and then come back down and break this level on the move down and get a close down there. That will convince us that we've got a short-term change of trend happening, and that could lead to the daily falling to our projected targets of at least, probably in the first instance, probably that 2630 area, which is right there. And then down to the 2440. Don't forget, when the markets are a little bit confused, they're going to gravitate to the important support and resistance zone. So it's easy to trade into those zones, and you can't go too far wrong. So I hope everybody has had an awesome week's trading. We've had some really good moves, some really good technical setups. Hopefully everybody has a great weekend, and I look forward to seeing you all at next week's webinars. Thanks, guys.